All right, guys, we are live coming at you. Got me and Isaac here. JT is with the boys, so he won't be joining us today, but he and I are going to make a pretty good video tomorrow, so tune into that. So happy MLK Day. Me and Isaac just wanted to come at you guys for a KIO macro. We haven't done one like this in a while. ETF's been out for almost about a week now. There's some new banking regulations that Isaac's going to speak about, and we're just going to look at some charts and give you our updated views on the markets, man. Isaac, how you doing today?
I'm doing good. Just hanging out. Enjoyed the day off. It's snowing here in DC, which is cool. What? Yuck, dude. What?
Not
no,
yet.
It's awesome.
I guess I'm just like,
yeah, it's very nice.
It's sunny out here in San Francisco. I'll take that. I grew up in snow.
Fair enough.
Yeah, man. Well, cool, man. Let's hop into it, man. So you were telling me about this banking regulation. Did you want to lead with that?
Yeah. So this is something that I've been looking into in kind of like a tertiary way, but it is called Basel III Endgame. It's essentially a whole slew of changes, regulatory reforms that are going to be taking effect on July 1st, 2025. The biggest one, the one that I've dedicated most of my time to look into, is the increase in capital requirements for major banks and regional banks. There'll be an increase of 21% capital requirement for large banks, the 8 largest banks in the country, and then a 10% increase in capital requirements for all regional and local banks.
What's the current reserve ratio right now that they're required to have? Do you know?
Yeah, the current reserve ratio is actually 1.1%. Holy shit, are you kidding me?
Wow.
Yeah, it looks like it's 1.1%. So they'll be increasing that by 10% for regional banks, then 21% for the 8 largest banks in the country.
So what you're saying is, right now, before this regulation, if I deposit $100, they're only required to keep $1 and lend out 99?
Yeah, it sounds a bit low, right?
That's insane. Holy shit.
Net transaction account. Okay, so it looks like over a certain amount, net transactions for account balances have to have a 10% reserve requirement. So it looks like 10% is like the effective rate for a lot of people's funds.
Right now?
Yeah.
Okay.
It works on a scale. Like not all funds are subject to the same reserve requirements.
Basically, the more that's deposited, the less you have to lend out, it sounds like.
Yeah. Essentially.
What effects do you think this can have on these already struggling banks? Now they have less money to lend out and make a profit while they're already like teetering down.
Yeah, well, obviously the issue is that there's going to probably be a restriction on available capital for consumers and borrowers. I mean, that's going to be, that's the necessity of what like a recession is, economic slowdown. When people have less funds to work with, they're going to be less likely to undertake large projects. Without companies and individuals undertaking large projects and purchases, you have a slowdown in economic growth. So increasing reserve requirements is essentially, it's counteracts economic growth. You can see why the Federal Reserve wants to increase reserve requirements, though. Obviously, there is fear of bank failure because we've had, 4 or 3 of the 4 largest bank failures in U.S. history happened last year. So there's obviously concern that bank failures could, we could have a lot more of them this year, especially with how much debt people are holding. Like there's an insane amount of debt being held right now. So if we see some large defaults, if something starts to break, there is a necessity to hold a lot of reserves in order to prevent that. But, what I've been predicting for a while is we're going to probably see a recession this year, though I've seen like 50-50, and Basel III doesn't come into effect until 2025. And then it's going to roll in from 2025 till 2027. So it really won't affect a lot of decisions this year when it comes to like if you want to figure out, are we going into recession 2024? I'd say Basel III is not going to be a big determinant for that. But if you're looking out like 2 years from now, factoring in Basel III would be smart. And if we don't get a recession this year, I mean, like we have to have a recession at some point. I would say 2025 would make a lot of sense for a recession to roll around, but we'll see.
I keep thinking that it's 2023, so I'm like 2025 is 2 years from now, but that's really just next year.
Yeah, that's next year. I know, we're less than a year away now.
Yeah, man. I would not have thought that the equity markets will be where they are right now.
Nobody thought the equity markets were going to be where they are right now.
Yeah, it's crazy. Well, that's good. 2025. So at least, that gives the market some time to kind of reset itself. Hopefully it happens.
Well, a part of the Basel III Endgame is new rules regarding credit risk transferring. And the reason why I know about this is because I'm going to be actually speaking with a group of banking and business leaders on Wednesday about this change and proposals that are being implemented right now in order to fix some of the Basel III issues. So there's a lot of concern that Basel III is going to lead to a credit crunch, that's going to lead to the inability for banks to lend out at their current rates, and that could slow economic growth. There is a way, though, to mitigate some of these negative effects from an increased reserve requirement. And one such way is credit risk transferring, or CRTs. And CRTs are extremely useful. And what they essentially are is if you have a loan and you have risk of default on those loans, you can take the risk of default on those loans and then basically sell it to a reinsurer. A reinsurer insures your insurance, basically. So it's like if you have a chance of defaulting on some mortgages, the reinsurer, if you pay a fee to them, can then cover your mortgage fee. So if you default, they'll then cover the expenses, the liabilities that come from default. So you avoid a lot of the risk. And if it takes some of the risk off the table for banks when it comes to lending, this will then encourage more lending from banks. So though reserve requirements will be higher, if we are able to, and what would do this is if we classify reinsurers as eligible guarantors of credit risk transfers, then that would help to mitigate some of these negative effects and incentivize more lending from banks.
Yeah, I'm interested to see how that plays out. So let's kind of change gears here. We had our ETF get approved. What was that, Wednesday?
Yeah. I think it was Wednesday.
Today's Monday. So we're already a week into the ETF, and I'm looking here at the Bitcoin price. JT said, buy the rumor, hold the news. The momentum is slowing down. I wouldn't say it's breaking down. The 200-day looks like it's starting to curve off. And every time it curves, it usually signals downward momentum in the long-term trend. But like you said, it is really early. But
it's very early. It's in a range right now. I predicted that we would see a drop last time we talked. It's hard to make these predictions, though, because obviously, it's fun to make like a really grandiose prediction, but in reality, we don't know what a lot of these things are going to do. Yeah, currently we're just kind of moving in a range. I would say until we see a actual break below this current range, we're not going to see, I can't make any strong predictions about where it's going to end up. The ETF, actually, it didn't sell the news like I was expecting.
Same.
I was expecting maybe a break to a lower range, even like 36K or something, but it didn't. It held. It did have a go up for 50, and it didn't quite make it. It made it to 40. What did it make it to? 48.8.
48.7. Yeah, something like that.
Yeah, and then there was a lot of sell pressure. Yeah, I mean, I think that we are, and I felt like this before. I think that we're near the limits of where Bitcoin can be at given the current market. And the market's fine, the market's good, but there's still a lot of expectation about rate cuts that I don't think are going to happen. And I think that's going to be an economic mitigator. I think that where is a good potential, we see a recession come, that is going to definitely be an economic mitigator. But I mean, honestly, as soon as we get that first rate cut, if the chance of recession is looking more and more remote as we're, going through these months here, I don't really see Bitcoin dropping all that much, because I just don't really see what's the catalyst to Bitcoin dropping. If the economy's fine, if the ETF has been okayed, and now we're getting institutional pressure to push Bitcoin up.
You got the halving.
You got the halving coming up. There's a lot of synthesis here. There's a lot of synchronicity, and I don't know. I don't really see a lot of sell pressure beyond maybe this next big threshold for Bitcoin. Like what would be the catalyst? What would cause it, other than pure just I'm looking at the chart, it looks like a bull, and it looks like it's kind of hit a ceiling, and now we're going to see a correction. Other than that, though, what is the catalyst here?
I think the only way that would make Bitcoin drop, and I feel like it would be temporarily just because the crypto market is went through a legit bear market. It has.
Yeah, it did.
Is if equities drop.
Yeah, I would 100% agree with that. I think equities would move the market here.
And I think that Bitcoin has been rising pretty much since like the beginning of 2023, I guess you can say. I guess it has still been correlated, but it dropped way more than equities. But that's also because we had a lot of centralized bad actors.
Yeah, we had crypto specific. How many Black Swan events did we have last year? Like 3, was it?
Seemed like it, man. Shit.
Yeah.
But yeah, it's interesting to think about a world where crypto can go up and equities can go down. But I wouldn't be surprised if that happened. I could see crypto like maybe taking a blimp, but I think it'll recover fast, just like it did during the pandemic.
Yeah, I just don't see like what would cause it other than just pure market action. What would cause it to really take a bit of a dive?
Yeah, other than equities, or some fundamental thing wrong with Bitcoin or ETH or Tether going down or Binance. Other than that, and I feel like the market can shake that off too. Like they took so many blows, they're just like, I'm ready to go up.
Yeah.
Do you think we're in a bull market?
I mean, does that right there look like a bull market to you? That looks kind of bull market-y to me.
Definitely does.
I don't know. I don't know if there's like a definition here for like the official bull market. But I think the bulls are clearly winning currently. They're clearly in the lead. They've had a good lead for a while now. I mean, this looks like a bull market. This looks exactly like last time we've had bull markets. We've low-key been in a bull market for a while now.
Technically.
It's been nothing but upward trajectory with new, little caveats for a while now.
Yeah, even everything's been kind of going up.
Yeah, I'd say we're clearly in a bull market right now. The question is there going to be a correction? I could see a correction, but I just don't see it being sustainable. Like the only way I could see a correction is like people maybe selling Bitcoin to pay off debts. Debts are very high right now. I could see people maybe selling some assets to pay off debts, but that's not a catalyst for a drop. That just slows growth. That just is like a trickle instead of like a downpour or something. I could see certain things like that. But also the fact that Bitcoin has an ETF now, it's going to, in my mind, tie Bitcoin even further to equities. It's there with more institutions using Bitcoin, they're going to change their Bitcoin portfolio based on the market more than ever before in the past. So if you thought equities and Bitcoin were tied at the hip before, I mean, I don't see that ever breaking at this point. I feel like we're going to be permanently, like Bitcoin's a part of the economy now. It's going to be permanently tied at the hip, Yeah,
I can see that too. Yeah, in terms of a correction, I can see us coming back down. Like this is the total crypto market cap. Right now we're at 1.6 trillion and we've been like resisting this level for the past couple months, actually. I can see us coming back down to test our 62. So that would wipe out 300 billion from the market, which sounds like a lot of money, but technically it's not really. And then I think we start blasting through these levels, eventually get back to this channel. We'll see. And then if you look at stablecoin dominance, it's been dropping consistently, and that's saying that people are in the bull market. We were within this channel. The more that stablecoin dominance drops, that means people are deploying their stables into assets. And if we go back to this chart, you can see that like this is going up.
Yeah.
Tether dominance is going down. Same with USDC dominance, just been going down, down, down. And if we look at Bitcoin's dominance, look at that candle since the ETF, man. That's crazy. But still in an uptrend, though. We came back to test our 200-day, but I don't really get too alarmed from this chart because Bitcoin normally leads the charge, and then ETH, and then other large caps, mid caps, small caps, and then meme coins start to steal the show. And then we got the ETH BTC ratio kind of pumping as well. And I said that when we get down here, this could be a good situation to cycle ETH to Bitcoin. That ended up being a really good trade. And then my largest holding in Pendle is still just like mooning. I bought in at these bottom 2 levels and I took profits here and here. I'm hoping we can get down to like somewhere back here in this level so I can like go back all in, because man, I think this one is going to like pump extremely hard. I'm really I'm really having a hard focus on real world asset protocols. I feel like GameFi could bring the most users, but I feel like RWAs can bring the most money. So yeah, man, we'll see, man. How you positioning your portfolio, man? You still sticking with your CDs? You doing anything new?
Getting some CDs. I got a lot of shit for it from that's one of my friends, Jack, who who does
He seems like
VC stuff. Well, he's a fucking altcoin
he's a
maxi.
decent. Yeah.
He's a total degen, but he's been turning me on to some more degen-y altcoins to fuck with.
So are you still sticking with the CDs? You making any changes? Are
No,
you buying more Bitcoin? You waiting on a correction?
waiting on a correction. I feel like there could be one because it just kind of makes sense that we would maybe see a small correction.
It's
But
usually before the halving too.
yeah, exactly. But I hate to say it, I'm not really working with many fundamentals. I like to work with fundamentals, and if I'm being totally honest, I mean the fundamentals point up. The fundamentals point like because I don't see the recession as being at all certain right now. Unless some shit really starts to break, which is not impossible. But you have to think like, what were the things that were slowing down the economy before? Like what was like leading to inflation? What like had the potential to slow down the economy? We were going from having no interest to now having still, I believe we're below our average interest rate, like all-time history average interest rate. So it's like we're still not doing that bad with interest rates. Inflation is more or less gone, or it's at least at very stable levels. The things that were leading to inflation, like supply chain issues, we're not seeing anymore, at least not to the same degree. We still are getting some supply chain issues, like right now in the Red Sea. You have the Houthis firing missiles, so like nobody can use the Suez Canal in order to transport ships. And I think that shipping costs have gone up like 20% or something as a result because they're all having to go through Cape Town. But all in all, I don't see that as being a long lasting issue. I think that our Navy could probably sort that out. And any issues that we saw coming from Ukraine haven't really panned out. We're still getting a good amount of grain and other supplies out of Ukraine. And I don't really see like a major catastrophe like we had a year ago or 2 years ago with like the invasion and stuff that led to all these supply chain issues. I just don't see that really happening. And the biggest issue that we had was post-COVID, we were just giving people money and they were able to build up savings. If you look at savings rates went sky high under COVID because people weren't working, but they were still making money from unemployment and the government was just giving them money. And then when the market opened up, everybody started buying things again with their huge amounts of savings. And no industries were at full capacity. So it took us like a year or 2 years to go from COVID to like opening up to being at like a full economy. Like our supply had to catch up to our demand. It looks like that's occurred now. Like our supply is now fully caught up to our demand. The major supply chain issues that were occurring in the past aren't occurring anymore. And I just don't really see, so I don't see inflation going back up. And if inflation is not going back up, I mean, the only place that interest rates are going to go next is down. And that is good for the economy. So I don't really see like what would cause a recession. Like, I don't really see what would cause a recession this year. Something breaking, but we're like, I don't know, we're fine. The Fed is in a good position to even like fix liquidity issues as well, because we haven't had like a liquidity shortfall either.
Are we still dealing with those microchip issues and like all that with Apple?
There is always the issue of microchips causing a economic downturn, but we're not to the same degree. I mean, like even if there's like minor microchip issues, the big issue that we are worried about is losing microchip access in Taiwan or China. Because Taiwan and China, mostly Taiwan, produce most of the world's microchips. And when shit happens between Taiwan and China, it causes fear over a loss of access to microchips. But Biden has been implementing measures to build domestic microchip manufacturing. We'll see how far that gets, but we're currently working to decouple ourselves from dependence on Taiwan's microchips. And the longer we go into the future, the more secure we'll be with our access to microchips.
Man, you know what else is interesting about this year? When I think about like a recession and all that, another reason why I think it's possible that we won't have one is because this is an election year.
This is an election year. And yeah, there's a lot of incentive, obviously, to make sure the economy's good. So yeah, I think there's a lot of things working for this year. 2025, maybe we get a recession, but I just don't, yeah, I don't really see what the catalyst is.
Yeah,
Unless there's some black swan event or something, which there totally could be.
never know. We get them every month, it seemed like. But
we get them all the fucking time.
yeah. So yeah, hopefully this year is green for crypto. We can make some money, take some profits, have some cash on the sideline for the recession next year or this year.
And we'll see. I thought it was gonna be Q1 this year, but I don't know anymore. I don't see what would cause it. Huh?
I thought it was going to be Q4 of last year.
Yeah, everybody thought it was going to be, I don't know, like, yeah, economy is basically okay. There's maybe some fundamental issues that could come into play later, but yeah, I don't really see, at least not for the next year, I don't really see any major catalyst.
Yeah. Well, guys, we are committed to keeping you guys informed on our opinions. Right now, things are looking good, as you heard. But like we always say, still use proper risk management and keep some cash on the sidelines because share just dropped. You never know when things can drop. What perfect timing was that?
My chair just had a black swan event.
So yeah, with that, guys, we thank you guys for watching. Thank you for tuning in. Be on the lookout for our video coming out tomorrow. And other than that, we'll catch you guys in the next video. Take care.